In 2005, we were less than 1% renewable electricity generation. Last financial year, we were 56%, and the projections are that we'll potentially be net 100% renewables by the end of the decade.
Wind, solar, EVs alone, without any other demand drivers that are out there in this world, require 30% more copper.
Biden's come out, and a really interesting spin that he's putting on it is that, to make this transition is actually an opportunity to create jobs, and because it creates new industries and it creates new opportunities.
If we don't have sufficient commodities for renewable energy, then what are our alternatives in a decarbonised future? Well, the obvious answer, in our view at Tribeca, is nuclear energy.
Well, good morning and welcome to One-to-One Mining Investment's latest webinar on decarbonisation. Today, we have a great lineup of panellists to talk us through the impact of decarbonisation, the decarbonisation trend on the mining industry, and the opportunities and challenges this major transition in the global economy throws up for the mining industry. We have Todd Warren, who is the head of research at Tribeca Investment Partners. We have Rick Squire, who is portfolio manager resources and energy at Acorn Capital. We have Bert Koth, who is managing director and partner at Denham Capital. And we have Richard Day, who is the director of strategy, policy and communications for the Department of Energy and Mining in South Australia. Gentlemen, great to see you today. Richard, you're the only, I guess, non-investor on the panel, but we are delighted to have you here today because South Australia is in many ways sort of leading the way as a bit of a pioneer in the decarbonisation space. Famously, a couple of years ago, you were having some problems with your electricity grid, and Elon Musk tweeted an offer to sort of help you out. Tell us a little bit about the background to you. First of all, putting together this the Tesla storage solution there for your renewables, and also some of the other things you've been doing around sort of virtual power plants and things like that.
Yep, thank you, Leo. Look, South Australia, we're widely regarded as the vanguard of sort of clean energy transformation. Just for a bit of context, South Australia is a very large state, 1 million square kilometres, but we're a population of less than 2 million people, and undergone, we're sort of blessed with world-class, renewable resources in terms of solar and wind. We've got gas here, we've got sort of low-grade brown coal, but we've certainly undergone a very rapid energy transformation from around sort of 2005 to present. So, and to put that in some sort of perspective, in 2005, we were less than 1% renewable electricity generation. Last financial year, we were 56%, and the projections are that we'll potentially be net 100% renewables by the end of the decade. So very rapid transformation. And of course, we sort of started as from an electricity perspective, a coal and gas generation state, and we're now predominantly wind, solar and gas, and a net exporter of power. So very rapid transition with more transition to go. Obviously, with any transformations or transitions, there's speed bumps and issues along the way. Certainly, for a period there, challenges from an electricity security, reliability, affordability perspective, and I suppose governments and the market operators have intervened pretty heavily to sort of stabilise and address some of those issues. So obviously, the famous example of the Tesla big battery. That really resulted from a government tender process that underwrote that battery for 10 years. And that battery's recently been upsized or supersized by 50%. So it's now 150 megawatts. So no longer the world's largest. It's been beaten by a couple of batteries in California, but it's certainly held that record for a period of time. So certainly energy storage has been a big sort of quiver in the bow in terms of solutions, both grid scale and also home batteries. So you mentioned the VPP. We've got a very significant home battery scheme here, providing rebates upon the installation of home batteries. One of the requirements is the batteries have to be VPP capable, and so we have a very vibrant retail market for virtual power plants, with I think at last count 7 or 8 different retailers offering virtual power plants, and including Tesla. I guess some of the other things we've been pursuing, a greater interconnection with our neighbouring states. We've only got really sort of connected to one state. We're at the end of the grid, so we're trying to address that. Demand management's very key here, as well as bringing in other sort of new equipment that can address some of the challenges. Emergency generators, gas-fired generators, synchronous condensers, which are a bit of kit that provide our electricity system with the system strength and inertia that it needs, that we sort of used to take for granted from our old thermal generators. And a big area of focus has been trying to bring in new flexible loads. So we've got a strong focus on green hydrogen, so making hydrogen from water using large amounts of solar and wind energy, and a big focus on accelerating up electric vehicle uptake. So it's been a pretty exciting journey so far, and I think looking forward, we're really seeing that the state's got competitive advantages going forward in low cost energy. We've certainly turned the corner on pricing. We're now cheaper than some of our neighbouring states, so sort of really turned the corner there. The emissions are down, and so we are very excited about the prospects for green hydrogen, green steel, green copper, green nickel, green graphite, all those kind of critical minerals or key and base minerals that we think the globe's going to demand as sort of the energy transformation accelerates globally.
And in terms of sort of resilience of your grid, how has the move towards renewables impacted that? Because after obviously what's happened in Texas, some of the Republican governor there was trying to sort of blame it on the renewables and the sort of the potential for the Green New Deal. How has your energy resilience fared?
Oh, look, similar experience here in terms of the fears debate. Perhaps back in 2017, but look, certainly over the since we have, as I said, sort of retrofitted our system with things like big batteries, other forms of energy storage, synchronous condensers, demand management, we're certainly seeing that the security reliability has really improved. And obviously the sort of the statewide blackout back in 2016 was a sort of a 1 in 100 year sort of storm event. So I think most electrical systems would have struggled to have withstood those sorts of tornadoes tipping over transmission lines. But certainly, as I said, security, affordability, and reliability is looking really good at the moment.
Absolutely. Turning to our investor panelists, if I could start with you, Todd. From Tribeca's standpoint, obviously this move towards more renewables, more battery storage, it seems to be an unstoppable trend. How are you sort of adjusting your investment focus to in the expectation of this trend?
Yeah, look, it's the decarbonisation theme has been one that's been playing out, or perhaps developing ahead of steam, a better way of putting it, for a little while now. I think it's fair to say, and no doubt, a global pandemic served to, I guess, bring people's attention very much to the theme. As far as our portfolio goes, we've been quite heavily invested in a few copper names. Remains a very much a favoured commodity for us, and we think there's less froth and bubble, for want of a better description, in some of those names, despite the fact that copper is reaching into the stratosphere, it feels like at the moment. But there's certainly been the other commodities that get a lot of attention are commodities like lithium, but interestingly, the equities are very strong, and yet the commodity price is only now just starting to develop a pulse again. The other commodities like nickel clearly are going to be a big beneficiary within the battery build out and huge demand for it. And yet, again, there's quite a lot of nickel around, but nickel prices are accelerating. So you need to sort of somewhat separate the performance of the equities to the performance of the commodities, strangely. And that, interestingly, what we see going forward, and I'm sure we'll get to it, is the discussion about coal. We are of the opinion that there will be an opportunity in coal, or indeed there has been in more recent times as coal prices have accelerated, because you simply can't switch directly from a for want of a better description, a carbon-fueled grid to a green grid. So I think there are opportunities, albeit you need to be quite selective.
Absolutely. Rick, from your point of view at Acorn Capital, when you're talking to sort of potential investors into your funds from the institutions and the like, what are they telling you about what they want you to look for when they're talking about sort of decarbonisation and to fit their sort of ESG mandate and things like that?
Yeah, sure. That's a good question, Leo. So we do speak to the investors, and they really like the thematic. They think it's it's not just topical, but it's it's something that's happening. So then the next element is to understand, ensure that there's an element of diversification in there, because it's almost impossible just to pick the single winners and whether that's winners in terms of individual companies or individual commodities. And so for that reason, when we look at it, we ensure that there's diversity across that sector and across that that decarbonisation, or that we call it the EV metals and the energy storage sector. And so for that reason, we actually have exposure in the rare earth elements in excuse me, in lithium, nickel, copper. We have the full spectrum there, and but it's also important to recognise a little bit, as Todd touched on then, that just before, that there's going to be some niche opportunities in this whole decarbonisation, because it's important to think about it as a transition. It's not a gigantic leap that's going to happen tomorrow, and so because of that, you can't write off things like oil that may have been important in the older economy, and certainly coking coal and elements of the coal industry, but it will be a transition, and so it's important to be mindful of that. And it's not going to be a linear transition either. That there will be little hiccups along the way, as Richard pointed out. That South Australia, it wasn't just a smooth transition that encountered for when they first embraced the concept of renewable energy. And so for that reason, when we're thinking about our portfolio, we're thinking about that the diversification of commodities, but also thinking about that transition and the transition risk that comes with that.
And Bert, what's your take on the sort of timelines that this transition will take? Rick just mentioned there's going to be sort of accelerations and decelerations along the way. How long do you think it's going to take to sort of move to this sort of low carbon or zero carbon future?
The honest answer is, like everybody else, I don't know. But what's actually more important, what we focus on, is actually what is actually the raw material intensity that is required to make a zero carbon future happen. And that might actually be the stumbling block. So with a bunch of technical consultancies, we actually did a number of quite detailed calculations, and I just share some back of the envelope numbers here, because it might well be there's not sufficient raw materials available to actually achieve a zero carbon economy within the Paris Agreement. So, for example, by 2050, to limit temperature increases beyond 2 degrees Celsius, in order to make that happen, you need to have a multiplier on wind and solar energy between 9 and 12 times of the current installed base today. So then you actually calculate how much copper you actually need for that. And I'm only talking about the copper per megawatt of installed wind and solar capacity, and I'm ignoring the copper that is necessary to connect these renewable energy installations to the grid, and I'm ignoring grid upgrades. So that alone would require about a 20% increase in global copper supply. Does not sound like a large number, but if you consider that Kamoa is the last major copper deposit that's been discovered on this planet, so then it's actually quite an alarming number. So, but then, and that required supply increase ignores the incremental copper that's required for household appliances, it ignores further infrastructure spending, and it ignores electric vehicles. So then let's take it a step further. Let's just add electric vehicles to that equation, to that demand equation, right? And let's ignore the charging infrastructure required for electric vehicles. Just the electric vehicle alone, right, consumes about 60 kilogram of copper per EV. So under the most conservative growth forecasts for EVs that's out there, which is like 23 million new EVs by 2030, that actually roughly translates into another 10% of copper required. So wind, solar, EVs alone, without any other demand drivers that are out there in this world, require 30% more copper. Now, right here, right now, I have no idea where that's going to come from. So today's copper production in the world is 21 million tons, and 1 million tons of it comes from recycling. So 20 million is primary mining production. 1 million ton comes from recycling. So even if you materially increase global recycling capacities by 200, 300%, you still have a primary mining shortfall where, when I look at the number of available projects out there today in the world, it's not clear to me where that metal is going to come from. So, I mean, we're talking about the equivalent of 7 Escondidas here. Escondidas, you all know, the world's largest producing copper mine. So you essentially need in the next to 10, 15 years, another 7 Escondidas only to meet the incremental copper demand of wind, solar, and EVs, ignoring household appliances, ignoring grid upgrades, ignoring infrastructure. And when you then analyze, you go from metal to metal and analyze that. So for example, lithium, under the most conservative electric vehicle growth forecasts globally, 200% of lithium supply by the end of 2030. As far as I know, and I might be corrected here, it's never happened in economic history before that the production of a metal within such a short time frame was being ramped up in such a volume. And that's the most conservative EV penetration forecast that is out there projected in the market. If you take the more bullish forecast, it's like a 400% supply increase required. Then you take like nickel. You said there's a lot of nickel out there, but I would say there's not a lot of easy nickel out there, because a lot of the nickel that's out there is actually laterite nickels that have actually very high implementation and execution risk. So also the 20% required additional nickel supply is actually a number that looks very, very difficult to meet when you actually look at the metallurgical complexities of all these projects with hydromet processes and all of that. These are all very, very complicated processes. So our focus is really as investors, and obviously we are positively aligned with all our LPs. LPs, that's the investors in the private equity world, how they're called. On that is to focus on those metals and minerals that are actually necessary to make the energy transition happen. But when we look at these numbers, I don't think it's properly recognized by mainstream media, by the public, actually, how many metals and minerals are actually required to make energy transition happen. So the precise answer to your question is, I don't know how long it's going to take. But what we do know when we look at the numbers, what actually the raw material intensity of it is. And that's, I think, something that's not widely recognized, in my opinion.
No, absolutely. I mean, some of the numbers you were putting out there, one would expect some massive price spikes, and then I guess people looking at, you know, substitutions and also sort of new processing technologies and maybe higher cost processing technologies and mining technologies to enable this. Just before we move on, I just want to sort of remind our audience that there are opportunities. You can totally ask questions during this session. At the bottom of your screen, you'll see a Q&A box. Please just drop your questions into that, and we'll put them to the panelists. But obviously, Bert's raised a very crucial issue there, where sort of, you know, where are the kind of pinch points going to come from, and supply side challenges. What do our other panelists think? I mean, Todd, you're sort of analysing the industry there. Do you agree with Bert? I mean, sort of something like copper. How high will the price of copper likely go? Yeah,
look, I mean, Bert's analysis is absolutely spot on, and you know, it really points to the real challenges we face in this industry. And I guess, you know, another area we can talk to on this panel is, you know, if we don't have sufficient commodities for renewable energy, then what are our alternatives in a decarbonised future? Well, the obvious answer, in our view at Tribeca, is nuclear energy. It's in our view really the only zero or low carbon baseload power alternative that can really sufficiently meet these targets of a net zero future in 2050. So with that in mind, yes, higher commodities typically are the solution for high commodity prices. High commodity prices are the solution for high commodity prices because they do trigger new exploration programs. They trigger a drop in cutoff grade to source what would previously have been uneconomic pounds or ounces, and that will of course occur again in the future. But I'd also pick up on Bert's point about Kamoa. The issue that we face is not just a shortage of available commodities. It's a shortage of available commodities in places that are easier to extract from, or where you've got a stable rule of law. Kamoa is in the DRC now. For the time being, things are stable, but that's not to say that will always be the case. So it's a crucial factor is that where we go for our copper pounds or our nickel pounds, a lot of the nickel pounds today, as Bert points out, are laterite nickel, and a lot of the nickel growth at the moment is coming out of Indonesia. People have their own issues with Indonesian geopolitical risk. So I think to that extent, we are very conscious of these ongoing shortages and the need for perhaps new exploration techniques, new technologies, and that of course has occurred over time. That new technologies have allowed or increased at least the success rates. But I think it really points to a pretty robust longer term supply-demand balance.
Absolutely. Just to go back to the question about sort of the metals, the growth that is required in these metals. I mean, certainly if you're looking at renewables, then the battery storage takes a big part of that. But are there other sort of storage solutions out there that may be possible to support renewables, which don't involve, say, lithium-ion batteries? Richard, have you looked at other storage solutions to support your?
Yeah, look, we've supported a range of sort of innovation projects in energy storage. There's interest in pumped hydro energy storage, underground compressed air, flow batteries, so more in the sort of the vanadium sort of space. And also, I guess we are seeing a lot of momentum around hydrogen, and so hydrogen can be made from renewables, from natural gas, from coal. It can be stored, it can be shipped, it can be used in a wide variety of energy applications as well as chemistry. So making ammonia as an example, and we are seeing potential as hydrogen energy storage as well. So whether you're making blue hydrogen from natural gas and sequestering the carbon, or green hydrogen. And then you can, recreate electricity from fuel cells or gas turbines running on 100% hydrogen. So there are certain scenarios where hydrogen is a form of energy storage. And then I guess from a minerals perspective, most of your electrolyzer and fuel cell membranes are all sort of formed out of the platinum group. So opportunities in different metals there.
I mean, another question. The question I asked just now came from a question from the audience, but we've got another question following up on that. We said, "What's the panel's view on hydrogen supply from Australia?" Hydrogen, obviously, could have a key role to play in the future energy mix, both as a sort of a basic fuel for fuel cells, but also as part of a storage solution in terms of hydrogen generators and then sort of fuel cells.
I could respond to that one. I think it certainly will form part, but this is where it goes back to the point I made earlier on about the transition to the low carbon economy. As an investor, we're primarily focused on where's the opportunity right now. Where can I make money in the next 12 to 36 months, and and then you're also looking for potential disruptions that might upset that over the next 3 to 5 to 10 years. But in terms of hydrogen, the way I view it is, yes, it is an option, but that's something that's probably more coming in 10 years plus. Not to say that there's not money to be made over the next decade, but there'll be a lot of pitfalls in that discovery path. That there's going to be a lot of dead ends that'll be chased in terms of developing technologies, in terms of how do we actually how do we store, how do we generate the volumes of ammonia or whatever it is, and then how do we actually interchange it? It's all well to do these things on the laboratory bench, but then how do we actually roll that out? What's the infrastructure look like to do that? What's the uptake going to be? And I think the initial part of this transition to the low carbon economy, we're going to see a lot of the battery storage elements like we're seeing at the moment, whether it's the battery in your electric vehicle or the big Tesla battery like we see in South Australia, and that's where the opportunity is right now. Hydrogen will come in and start to substitute out some of those things, but there'll be a lot of trial and error. And you'll see these big groups like FMG was Andrew Forrest was talking about having the use of hydrogen on the Fortescue sites, whether it's actually for steel production or just in as a substitute for diesel. That yes, that'll come in, but there's a difference between that small scale application in a niche environment to widespread rolling out of that technology. So this is where I think it's really important for investors to put that context on the time frame and not be swept up by the hype. That there is a lot of hype out there, and we're this is real what's happening. But some of the things that are talked about are a little bit sort of pie in the sky and too far off in the distance for investors to really be taking serious. It's be aware of them, but don't be lured by all the flash and the razzmatazz.
I mean, to continue the discussion about timelines, do our panelists think that sort of the COVID crisis situation has accelerated or slowed the transition?
I'll jump in. I think it's obviously accelerated the discussion, at least, and some of that is perhaps by the fact that people are looking out their windows, and certainly in parts of the world who would otherwise have more heavily polluted skies, and we're perhaps lucky sitting here in Australia, or those of us who do sit in Australia are lucky to look out our windows and have relatively clear skies. But certainly, I think if you consider it from a Chinese perspective, no doubt, as they looked out their windows and saw clearer skies, there's clearly an appetite for a less polluted future. Now, that clearly doesn't happen, again, as we say, it won't happen tomorrow. But it clearly, in a Chinese perspective, again, they have, the Communist Party has a clear mandate to rule, but it's only premised on a platform of social harmony, really, in their own words. And that social harmony comes with certain expectations. And I think one of those is, coming to light here where, people are feeling much healthier and happier in a less polluted world. So I think it's certainly accelerated the discussion. And I think it's forced people to certainly look at, to Rick's point, the cost of that discussion is real, and perhaps, and Richard would certainly have a view on this as well, I'm sure, that, how do you make that transition whilst, I guess, speaking to that cost of that transition with your voters, which is not, I think, straightforward. And the ESG consideration, this is very much an E consideration. What I think often doesn't get discussed is the S consideration here, where we're sitting in developed first world countries who can afford to pay more for our power, and if you're sitting in a developing country who doesn't have that luxury, I think that's something that often gets glossed over, is simply the these countries don't have the ability to make that transition near as quickly as we do, and then do we then place on them the same obligations as we are taking on ourselves with regards to a lower carbon future, and how quickly we make that transition?
Do our panelists have an opinion on that? I mean, one thing that I sort of, as you were speaking there, sort of came into my mind is that, and this has been sort of amplified, I guess, by what happened in Texas, which is where obviously people were relying on the grid and the grid failed them, and through the COVID process, people have been sort of reconsidering where they live and who they rely on and the role of government and things like that. And now it is. And Richard's had this experience in South Australia, where they've had this virtual power plant concept, where they had sort of 50,000 homes who had their own rooftop solar with a battery. That sort of moved towards more sort of self-reliance and being in control of your own destiny. And there are now technologies available where you can have quite easily have rooftop solar and a battery in your house. Is that something we're going to see accelerating this transition as well? And you talk about sort of in the developing world, is it easier for them to put in a big national grid, or is it easier for them to do more sort of local, maybe sort of community scale projects, which might be easier served by using wind turbines and solar power than by building a whopping great power station somewhere and then trying to have a national grid?
Is that one?
It's anyone who wants to jump in, but yeah, I guess Todd, you can.
Look, it's a really good point, Leo, and I don't know the answer. I think it comes to the point about grid investment, and Bert touched on grid investment being something that's just not considered. We talk about the capital cost of putting in wind farms or solar arrays, but it's often very little consideration given, at least I'm sure it is at governmental levels, but perhaps not at market levels, as to what the cost is involved in completely renovating, for want of a better word, the grid. Now, again, it comes back to the point, yes, I can go and put solar panels on my roof, and indeed, that levelized cost of electricity makes that, from a purely economic standpoint, let alone my desire to lower my carbon footprint, an attractive proposition. At the moment, and I speak from experience, having just done the maths at home, the economics still don't quite stack up with regards to a battery. That's my own experience. But, I then look at your ability, again, I go back to a developing world example, and China is a prime case in point, where they have just had an incredibly cold winter. And when you turn the lights off and turn the heating off, you very quickly find out that people aren't too happy about that. And Texas is another case in point. And guess what? China now turning back on their coal-fired power stations in order to keep the masses happy. So yes, it accelerates the discussion, but it's not straightforward.
I mean, I think you brought up another point, which you mentioned yourself earlier, about the need for nuclear in the future energy mix. What do our other panelists think about uranium in that future energy mix? Rick, what's Acorn Capital's take on that?
Yeah, we see uranium is certainly part of the mix in the future. In the US, 30% of the power is generated by nuclear power. So if the US, wants to achieve these emission targets that the government's setting, that it can only be achieved by maintaining, if not building on that base, and the reliability will come into that. So again, I go back, I'm sort of harping on this same point, that it's all part of that transition, that you can't knock things out and you eliminate them. So you've got to work out what your priorities are at the start. And I think the priority is the big emitters, and the reality is that's the big thermal coal plants. So that they're the ones that will be wound down, if not eliminated in the short term. And the short term is probably 30 plus years, where you have to maintain that baseload feed from uranium, and whether there is a debate whether it actually creates a bit of resurgence in the use of because of those green credentials that come with nuclear. But that's a whole other debate. But going back to the point you're making previously, that we often, the old rhetoric was that you've got to make a choice between investing in climate change and or investing in economic growth. But Biden's come out, and a really interesting spin that he's putting on it is that to make this transition is actually an opportunity to create jobs. And because it creates new industries and it creates new opportunities. Here we are, we're just talking about the resources. What about all the opportunities that are going to come from, retail trading of power, that I save energy off my solar grid on my house, and I sell it to the guy down the street, or to the company operating down the street. There'll be all sorts of new opportunities that come out. And so, people often think too much about the negative, but they're actually incredible upside. And if we're talking about this excitement just from the resources, I just wonder whether it's the energy services and other sectors out there that there's just equally as big opportunities for them as well.
Well, I thought it was very interesting that one of Biden's first announcements was the electrification of the US federal fleet of vehicles, which includes sort of postal vans, and I think two of the major contenders for building those electric vehicles was actually in Ohio, which is obviously a notorious sort of swing state, which went Republican this time. But he's probably hoping that the people of Youngstown and the people of Cincinnati will, if he can get them building lots of electrical vehicles and creating lots of jobs, it might swing over to his side next time.
I just wanted to make a comment still on the uranium, because you might actually need a nuclear industry just to produce the hydrogen that is required, because that's actually an extremely energy intensive process. So again, a few back of envelope math. So for example, if you want to replace one single blast furnace, 2 million tons of steel, a normal one, right? And you want to get rid of the metallurgical coal content, and you want to hydrogenize that, you need every single year 110,000 tons of hydrogen just for doing that. So that's one blast furnace that produces 2 million tons of steel. In the world, there's 1.5 billion tons of steel produced. So the amount of hydrogen that you will need, and if the premise is that this amount of hydrogen needs to come from green sources, I can see no realistic way how to actually produce that without actually throwing a substantial component of nuclear into the mix.
I mean, looking at that, then, I mean, in terms of the uranium price at the moment, and where it might head, do you have any thoughts on that?
No, because there are uranium stockpiles out there, and it's fairly intransparent how large they are. They're being held in government structures, for example, in Russia, where there's no transparency how much there is and how much of it's going to get released into the market. Yeah. So when you have that much secondary supply actually parked in ownership structures where it's not that transparent how much there is, it's really difficult to call a price. I never like to call a price because I would be wrong 90% of the time. So,
I mean,
it's good.
Yeah, with the
you think that's good if I'm 10% right?
I mean, with the potential for what sort of some fairly wild sort of price swings in some of these commodities, and as some of you mentioned earlier in the panel, that some of these commodities are mined in jurisdictions where there have been problems with the government in the past. Are there expectations going forward that if, say, the price of a particular commodity spiked, governments that could cause some problems with the governments, for example, adding big royalties, or even more serious consequences where people might start sort of jockeying for power in order to gain control of those resources in a particular country?
Of course. I mean, you've seen it in the DRC with cobalt being basically declared a strategic metal because probably if you exclude cobalt that's coming from nickel production as a byproduct, probably 90% of the world's primary mined cobalt, if not more, comes from the DRC. Of course, governments are waking up with that. Now, I mean, there's in reality no problem with the price levels is really high that some incremental tax is getting charged, right? I mean, also in Australia here there were discussions about the super profit and windfall taxes in the mining industry. So that discussion is, frankly speaking, not unique to certain African countries, right? But the danger is, of course, that one particular price spike is then used for a permanent large redistribution of economics, right? So that is always the danger that then comes with resource nationalism, right? But you know, again, for the battery industry going forward, I mean, people have been working very hard to reduce the cobalt in the electric vehicle battery. But as far as I can see, while the cobalt content has been significantly reduced, it by no means one has been able to kind of substitute it away, really, right? So the fact is that the world's EV industry and the batteries rely on cobalt from the DRC. And that's just a simple fact. It's like with rare earth, you know, also the electric vehicle motors and all of that and the permanent magnets and wind turbines will require 300% increase in production of rare earth at a time when actually China needs more and more of that stuff for itself. Again, no idea where that's going to come from, because we're just developing a rare earth project, and you know, rare earth is actually really technically very complicated field. Yeah, I mean, there's the current hype, and every company that has rare earth on its banners all of a sudden worth a few $100 million market cap, right? But that kind of ignores the fact that this is metallurgically and from a material handling point of view very, very complex, more so than most other metals mining projects. So there's no way that you can just simply increase that, right? And again, you know, electric vehicle motors need permanent magnets, just like the permanent magnets in wind turbines. And those rare earth elements need to come from somewhere. To give you an example, Europe, for example, at the moment procures 98% of its separated rare earth from China. So I mean, there is the problem that for some critical minerals, there is an almost singular reliance on certain jurisdictions, and that can well disrupt the whole global supply chain, and in itself put the achievability of a zero carbon economy at risk. Just look what's happening with the automakers right now with chips, yeah. With computer chips, they have to scale down production, right? Today it's the computer chips, tomorrow it's maybe the rare earth, tomorrow it's maybe the cobalt, tomorrow it's maybe silica sands, yeah? And all of a sudden you find that you can only produce half of the wind turbines or half of the solar panels that you have in your forward planning. So it's a real risk. I'm not saying it's going to happen, but I'm saying it's a real risk.
Absolutely. I mean, these comments all tie into a question we've had from the audience here, which is around given the scarcity of all of these metals, what are the opportunities in Central and South Africa as helping alleviate the scarce supply? Or, and he says, but he brings up the question about political risk. But obviously, massive opportunities for those sort of countries, as well as these potential challenges on the downside. Are we looking at a sort of, you know, a potential economic boom in Africa, for example, where a lot of these minerals are produced?
Hard to forecast. Again, I don't like to making forecasts. Sorry for always sidestepping and avoiding your questions, Leo. But I think what I can say is that you will have to see, by necessity, a significant capital shift in natural resources from developed jurisdictions to developing jurisdictions, by necessity, because some of the technically and metallurgically easier deposits of material scale are increasingly in jurisdictions that are not Australia and Canada, right? If that translates into an economic boom for particular countries, that I cannot answer, but you will certainly see by necessity a capital shift towards countries that are perceived as riskier.
Absolutely. A question from our panelists here. They say, do our panelists have a view on whether miners will look to fuel cells or electric trucks to reduce their emissions? and obviously, you know, this ties into the decarbonisation argument. You don't just want the materials to be green. You want the production of the materials to be green as well. In terms of the investors here we have on the panel, you know, what are you? Do you look at a company and say, well, you know, how do you power your trucks at the moment? Is that something you consider?
I think absolutely, it's part of the consideration. I think Rick touched on it earlier. You know, with regards to, you know, well, it's certainly starting at the bigger end of town. You know, the BHPs, Rios, and Fortescues and the like, who perhaps have the wherewithal and the scale to contemplate such a program. But it is absolutely part of a you know, list of questions that you would otherwise ask these companies. You know, it's very difficult for these companies these days to be part of a decarbonised future if they're not decarbonising themselves, or indeed pitching to governments and being a vocal participant in the discussion without taking steps themselves. And you know, the same applies to all of us. But yeah, I think, you know, Rick touched on it earlier. Our investors are asking us, you know, how are we contemplating a decarbonised future? What are we doing about the types of companies we're investing in? Are they reducing their carbon footprint? So yes, the answer is an absolute yes. This is happening, but it's happening at the big end of town first, and it will gradually trickle down. Simply at the moment, because it costs you more to have a fuel cell or a electrified vehicle as opposed to a diesel-driven truck.
Is there a role for government here, Richard? Yeah.
Yeah, I was just look on that question. Look, it's pretty early in the journey, but certainly there's a project in South Africa involving Anglo American and Engie, where they're looking to retrofit haul trucks or produce haul trucks that run on hydrogen. So sort of right at the very beginning of that sort of application of fuel cells in that really heavy haul machinery. We're certainly seeing interest from miners here that are looking to develop, you know, very remote mines in sort of greater, you know, diesel-free mining in effect. You know, sort of that use of renewables in the mining and production of hydrogen to power freight vehicles and so on. So that's sort of a longer term sort of vision, but that's certainly already been looked at. And we're already starting to see some of the miners use electric vehicles underground. Obviously, it sort of helps with some of their air quality issues underground and sort of work health and safety aspects. So certainly seeing some of those early innovations in use of, I suppose, zero emission vehicle technology in the mining sector.
And I suppose, as to Todd's point earlier, where it's about cost, some of it's about cost at the moment. You know, same as with passenger vehicles, the cost is coming down very rapidly, and I guess you would expect the same to be said with trucks. We've got some more questions here from the audience, and one question is around thermal coal. Someone says, will thermal coal stocks be the new tobacco companies? And we talked about this a little bit earlier about what is the sort of end game for thermal coal, so to speak. You know, is there sufficient production capacity at the moment to sort of manage us through the transition to a zero or low carbon future? Bert, what are your thoughts on that?
Well, usually if capital gets allocated ultimately to where it's needed, usually, not always. So to be clear, we do not invest in thermal coal, as a fund. So therefore, I'm also probably not the highest authority out there to speak about available thermal coal capacity. But you know, there are a lot of thermal coal mines out there today. Yeah. So I personally would expect there will be enough capacity, because those countries that need it will, if necessary, finance it themselves before the grid goes dark. Mm-hmm. Yeah. So that would be my working assumption. So when push comes to shove, there will be enough capacity out there. But again, since we do not invest in thermal coal, and I'm not the kind of strongest voice of authority in that matter out there.
Yeah, I mean, someone's asked a question, say, is decarbonisation, is the trend towards decarbonisation having any impact on projects' ability to gain finance? Obviously, thermal coal, definitely.
Yes, absolutely it is. There's absolutely zero doubt about that. And I think to the previous question, thermal coal companies, the tobacco companies of today, well, I don't think it's a future consideration. I think it's current, because you only need to look so far as your ability to that next question, ability to get funding for a new thermal coal mine, very challenging today. Certainly, any number of the big banks have said, no, we're not going to fund any more coal developments. Governments are reluctant to permit new coal mines. And then, equity markets are placing a higher cost on their participation. So I think there's absolutely zero doubt about the fact that thermal coal is facing a challenged future, let alone the shift to other forms of power consumption. I think just the ability to get a new coal mine off the ground, at least in the developed world, is challenged. But I think Bert's spot on that, and again, come back to China. China's just installed a huge number of new thermal coal-fired power generation facilities in the year 2020.
Interesting. We've got another question from the audience. This is, well, it's directed at Bert, but it says, do you think the big laterite nickel deposits in PNG, Indonesia, etc., will eventually put a lid on the nickel price once they're developed?
Well, I mean, in a way, for the last 10, 15 years, you would argue that the laterite nickels in the form of nickel pig iron have already. Yeah, it's just because of the battery nickel demand now that we see nickel prices spiking. Yeah, but if anything, I would argue that the ever increasing share of the nickel pig iron in the supply mix, because there's a ferronickel market and there's a battery nickel market, and of those two, the ferronickel market for stainless steel is still the far larger market segment out there, right? And so, is there going to be a sustainable bifurcation of prices between ferronickel and battery nickel? I don't know, right? But having said this, the ferronickel market had its price kept for a long time simply because there's more and more nickel pig iron comes out there. So it's almost 30% of the supply. And the steel plants prefer it because they get the iron units for free. Yeah. And then you have nickel coming from countries where, for political reasons, even if production is loss making, it's going to stay in place, right? I mean, you take, for example, New Caledonia, or you take, for example, Russia. So no matter what's happening there, that material will be in the market. Yeah. But on the other hand, so laterite nickel have a very high execution risk. I mean, most laterite nickel projects, frankly speaking, historically have been a financial graveyard for investors, and it's been very difficult. There've been some success stories as well, but many of them had spectacular failures. So the future of nickel is for sure more complex and complicated projects. So will there be a lid on the nickel price if they're all developed in Papua New Guinea, Indonesia, Pacific? Yes, but the assumption here is that they're going to be developed roughly on time and on budget, which I personally think it's not going to happen, just given the underlying technical complexity of many, if not most, of these projects. So as I said before, the 20% projected supply increase in battery nickel under a conservative EV penetration forecast is already difficult to see where that's going to come from, right? And yeah, if you have more bullish forecasts like 40 million EVs by end of 2030, and by the way, all of that ignores the stationary batteries that you need for permanent power storage for wind and solar. I'm only talking about electric vehicle batteries right now, right? I'm talking about nothing else. Yeah, it's really hard. If I have to make a price bet, I would rather bet there's a long-term nickel price rise. But don't call me out on it when we reconvene on another panel like this in a year from now. So
it's all good. It's all good. I mean, you've raised. I mean, again, you've raised some interesting points there about future sort of supply side shortages and price spikes and things like that. Do our panelists have any thoughts on if? I know, Rick, you mentioned that you like to look in the sort of slightly nearer future rather than going too far out. But if we were looking further out, to where there is a critical shortage in supply. Are there any metals that might benefit as potential substitutes for some of these things? So if we don't have enough copper for electrical circuits or something, do we use something else? Do we use silver? Do we use aluminium for power lines or something like that? Are there any opportunities out there that people might not thought about?
Yeah, that's a good question, Leo. I suppose it depends how far you want to look out there. But there have been articles written about silica and other alternate forms for energy storage. I think it was Richard might have mentioned some of the the vanadium cells that are used to store energy. That they're actually very efficient, but they're more expensive. So there's a cost factor that's inhibiting their widespread application. And Todd just gave the personal example of looking for maybe energy storage in the home. That it's prohibitive today. But then electric vehicles, the cost of buying and running an electric vehicle 10 years ago was only for the really wealthy. But now some of those things are converging. So I think a lot of those things, as they become mass produced, they're rolled out, they bring that cost base down. That's probably where the future is. And when things pop up, they usually pop up from the left field. That someone comes up with a new technology that maybe it is hydrogen, and someone sort of cracks the nut in terms of how do we deal this? Because one of the issues with hydrogen is you've got these big cells. How do you actually transfer them over? It's okay in a truck. You might be able to take a big cell out and swap it in, just like you do with the little gas bottles for your barbecue these days. That maybe it'll be some version of that, but it's still got to be done in an efficient way that you can actually generate the hydrogen close to that source, distribute it, and then be able to turn it over. So that infrastructure is a real issue for those things. But if those really big nuts can be cracked, that's where the future is. But so I'm not really answering your question because I don't know where it is, and I think it's very difficult to predict where it comes from.
I mean, we have a question from the audience here. It says, will sort of the availability of platinum palladium limit hydrogen production, but also obviously sort of limit the use of fuel cells if there's not enough of those platinum group metals around?
Not with the big chalice discovery.
There you go. Excellent. We are
my one little plug for the day.
There you go. There we go. Unfortunately, running out of time here. We've had lots of great questions from the audience there, but just a sort of a final kind of wrap up. If you were to pick the metal, the material that will most benefit from the transition to, or even the okay, let's go with the metal. I was going to take that broader, but let's go with the metal that will most benefit from the transition towards zero carbon future. What would you pick? Rick, start with you.
Oh, geez, you're tough there. So I'm probably, well, it's not a metal, it's the rare earths. I think there's a great opportunity there. I think, lithium's the exciting one in terms of the bulk, running it out. But just because of that reliance on China, I think, the rare earths.
And a particular rare earth are you talking about the permanent magnet?
The neodymium praseodymium used in the high strength magnets.
Absolutely, and obviously if we can overcome sort of processing challenges, and I know ionic clays and things like that are getting a lot of attention at the moment. Bert, what's your pick?
I mean, obviously, having analyzed the whole metals and minerals basket, how it's gonna impact. I mean, there's obviously quite a broad range of things. But if you give me only one bullet to fire right now, I say it's gonna be copper, because in addition to the specific needs for energy transition, it's still every household appliance, every home renovation, every new office building, all of that, the stimulus money, the wall of stimulus money that's coming upon us, some of it will find its way into consumption, house building and infrastructure build out. And that's also going to benefit copper big time. So, but again, that shouldn't mean that the others are not worth considering. So you just gave me one bullet to fire, so it's copper. But I agree. I agree with Rick. I mean, neodymium, praseodymium, dysprosium, you need 300% more of those to meet energy transition. You need 3 times as much lithium is produced today. I mean, all of those. I mean, what's going to happen is the marginal projects are going to get developed, and that's going to be interesting from a financing point of view, because financiers will have to get comfortable with the fact that they have to take a punt or a bet on structurally higher prices in the future than were observable in the past. And it remains to be seen whether project finance institutions and equity investors are going to get genuinely comfortable with that.
Absolutely. Todd, what's your pick?
Oh, I'm on the copper train. Yeah, no, again, hard to be pushed into a corner, but yeah, I'll take copper. The one thing I guess I'd add to Bert's comments, and we've sort of alluded to it throughout the discussion, is geopolitical risk and indeed the desire for governments to de-globalise, for want of a better term, and have their foot on their tons in their own country, not be reliant on others. Now, I know copper is prevalent around the world, or at least available in many different countries, but the value of deposits in certain countries, I think, will go up. I also think, again, to the point about a decarbonised production, I think there will be a decommoditisation to some degree as well. So with the advent of blockchain technology, I think the ability to purchase clean pounds of copper will also be something that will increasingly become in demand.
Very interesting. Richard, I'm not going to ask you for a metal prediction, because you're not looking at that every day, unless you'd like to make one.
Oh no, I was going to jump on the copper train as well, as a proud South Australian. You know, we've got tremendous copper resources here.
Yes.
Olympic Dam and Carapatina and Oak Dam perspectives. So I think my mining colleagues would kill me if I didn't take the opportunity to support Todd and Bert on that one.
Absolutely. I mean, it's in terms of South Australia, you've got, you know, obviously you've got the uranium there at Olympic Dam. You've got some sort of rare earth potential down there with you've got some clays and things. You've got the copper. You know, a great spot to be, I guess.
Yeah, and the other thing we've got the rare earth processing potential with the very advanced smelter at Port Pirie. So even if the minerals themselves aren't actually mined here, we do have a very advanced smelter that can process some of those rare earths as well.
Fantastic. Well, the message from this panel, obviously, is, you know, huge opportunities. This is a sort of, you know, generational shift, I guess we'd say, and all the opportunities and challenges that brings along the way. But you know, grab your pickaxes and head to South Australia. You know, that's where the mining boom starts, I guess. Anyway, I don't know. I'm not making any recommendations here or anything, but thank you very much, panelists, for joining us today and sharing your thoughts. Thank you very much to our audience